Is there anything that you found noteworthy from the statement just released? Or are you, like everybody, kind of looking ahead to where we are by the end of this year or by March of 2023?
There's no surprises here. Reality has hit the Fed in the face that the economy is doing much better than they expected, and they reflect that in the statement. They still are holding to their policy. They, as part of their average inflation targeting framework, which is new, they want to have inflation be slightly above 2% for a short period of time, and they want to achieve that. The one thing that worries me a little bit here is that they keep on talking about getting employment to be high, that we really don't know where that is. And actually, I think the Fed is much too relaxed about the fact that they think the Phillips curve doesn't exist very much anymore, that there won't be any inflation coming out. I think they just must keep their eye on the inflation ball and not let inflation get out of control. And that's, I think, really key. They need to communicate that a hell of a lot better, I think, than they do.
Yeah, talk to me a little bit about that, because I sense you are at least mildly critical, Rick, of the Fed's communicating. And it does seem that they've been quite careful about telling the markets and the players over and over again that they're not going to touch interest rates for a long time, and they're going to keep buying bonds for a long, long time.
Yeah, I think that this is an issue about how you do what's called forward guidance, which is to provide information about what you're going to do in the future. The Jay Powell Fed has been very reluctant to let people know how they'll react to future events. And I think actually that's a mistake. The issue is that they do, and I think rightfully, have moved to this new framework, which says we don't let bygones be bygones. If inflation's been too low in the past, we want to make sure that inflation actually is a little bit higher for a short period of time, so that the average is actually at 2%. But you do require explaining how you might change your policies, given that there could be change in circumstances. Jay Powell's been very reluctant to do that. It's understandable; they don't like to be pegged down. But this is extremely important, particularly because you worry about having another taper tantrum. You want the markets to understand what you're doing. In case the economy keeps on coming in much stronger than they expected, which it has been so recently, if the vaccine does work, which we hope it does, they're going to have to revise their plans a little bit, and they actually should indicate how they'll do that.
But I think you've hit on the idea there that if I were in, or maybe you were in Jay Powell's shoes, the last thing you would want to do would be to tie yourself down to if A, then B, or if A number comes out, then we'll do this. And maybe there are extenuating circumstances, or maybe the consensus isn't there in the room to do that. So I guess that would be the hindrance there about being more transparent, right?
Yes, but you can do a lot more than they're doing. I think that's where my criticism is mild criticism. I really don't have a problem with the Fed's actual policies, but I have had some problem with their communication. I think that they've been much too loose on describing the new framework that they have. So they say average, but they don't tell you average over how long a period, which could mean anything. It averages over 30 years, it doesn't mean anything.
Right. No, that's right. I mean, you got to set a time frame there. Average over 2 years, average over a year.
You can't be completely loosey-goosey. You got to provide some feel for exactly what you're trying to do, and it does pin you down a little bit. But I think you can deal with that. I think that there's a reluctance. This is a little bit more like old-style central banking. A lot of the theory and research actually says new style central banking has to be more transparent, give more information. They do have to worry about not being seen as giving a commitment to a particular number coming in. I don't believe, for example, the Fed should follow strict rules. But I'm sorry about that. I got to
That's Jay Powell on line one.
Yeah,
he wants to communicate. He wants to communicate effectively with you, Rick.
He wants to yell at me on this one, but so it is a little tough. But I think that they need to do somewhat better on this.
Shepard Smith here. Thanks for watching CNBC on YouTube.